Most traders look at candlestick charts every day. But do you really know what every candle is telling you? And how AI can read them faster, with more accuracy, and without bias? Today, I'll show you exactly how to read candles. The 5 patterns you should know first. Why there are more than 40 patterns in total. And how AI turns all of this into clear, actionable decisions. A candlestick shows the battle between buyers and sellers over a set period of time. 1 minute, 1 hour, 1 day, whatever time frame you choose. It has 4 key prices: the open, the high, the low, and the close. The thick part is called the body. It's the distance between the open and the close. If the close is higher than the open, it's bullish, usually green or white. If the close is lower than the open, it's bearish, usually red or black. The thin lines above and below the body are called wicks, or shadows. The upper wick marks the highest price reached. The lower wick marks the lowest price. A long wick means price went there, but didn't stay. A short wick means price stayed close to the body. Body size matters too. A long body means one side dominated. A short body means indecision. Buyers and sellers fought, but neither won. When open and close are close together, the market was balanced. When they're far apart, one side took control. If the total range from low to high is big, volatility was high. If it's small, volatility was low. Then there are gaps. That's when a candle opens above or below the previous close, with no trading in between. In stocks and forex, gaps often come from news or low liquidity. In crypto, they're rarer, but AI still spots them and checks the cause. Now, candlestick patterns. There are more than 40 of them. You don't need to know them all to start, but knowing that number shows how deep this gets. Today, we'll cover 5 key patterns. For each one, I'll tell you if it's usually a buy signal, a sell signal, or simply a don't buy yet if you're not already in a trade. And I'll show you how AI refines that signal using context and data. First, the doji. Tiny body, often long wicks. It's indecision. By itself, it's neutral. But at major resistance, after a strong rally, it can be a warning to take profits, or not to buy if you're flat. At strong support after a drop, it can be a don't sell sign. AI checks the bigger trend, how stretched price is, and compares it to thousands of past dojis. Second, the hammer. Small body, long lower wick, close near the high, often after a decline. This shows buyers stepped in hard, usually a potential buy signal, but only with confirmation. If you're short, it could mean take profit. If you're flat, wait for the next candle to follow through. AI checks location, volume, trend, and past results before giving it a green light. Third, the shooting star. Small body, long upper wick, close near the low, after a rally. Often a top warning. If you're long, it might be time to reduce or take profit. If you're flat, it's usually a don't buy here. AI filters out false stars by checking momentum, volume, and trend strength. Fourth, the engulfing pattern. A bullish engulf wraps the previous red candle. A bearish engulf wraps the previous green. In trend, they can mark continuation. Against trend, they can mark reversals. AI checks size, volume, trend, and how often that exact setup worked in the past. If the data says low quality, it's don't buy yet. Finally, the morning star and evening star. 3 candle reversals. Morning star, strong red, small indecision, strong green. Evening star, the opposite. For open positions, they can signal taking profits or reversing. For new positions, wait for that third candle to close strong. AI detects even messy variations and still gives a probability score. Here's the key. AI never treats patterns as automatic buy or sell buttons. It looks at your situation. If you're already in a trade, should you take profit, trail your stop, or hold? If you're flat, should you enter, avoid, or just watch? If you're planning, should you set alerts and wait for confirmation? And here's a quick teaser for next time. Candles tell you what happened, but they don't tell you how strong the move was. That's where RSI comes in, the Relative Strength Index. It measures overbought and oversold conditions. When AI combines RSI with candlestick signals, it filters out weak setups and highlights the strongest ones. And one last mindset shift. A sell signal doesn't always mean sell everything. If you're already in, it might mean take some profits or tighten your stop. If you're not in, it might simply mean don't buy yet. That difference alone can save you a lot of losses. Like the post. Follow Nuggy Zebra. Think smarter.